Today we're going to discuss why SPY, the S&P 500 tracking stock, is my absolute favorite underlying for trading stock options. The biggest reason is probably because I trade calendar spreads. Calendar spreads do best if the market doesn't fluctuate all over the place, or the underlying stock doesn't fluctuate all over the place. Since the SPY is based on 500 companies, you're not vulnerable to a single company coming out with great news or bad news and having that stock fluctuate wildly, killing your calendar spreads. But let's look at the option prices themselves. Here are SPY option prices. We notice that there are weekly options available, monthly options available, quarterly options available. And that these options are available at strike prices which are only $1 apart. 134, 135, 136. If you were dealing in options of an individual stock like IBM or Caterpillar, these strike prices are $5 apart, so you can't tailor your investment very precisely. Also, look at the open interest here in the monthly options. Over 100,000 options outstanding at each strike price. That means there are deep markets, and you can always find an active market out there for your options when you're buying and selling. But the biggest reason I like SPY is right here, the difference between the bid price and the ask price. Here there's a 3-cent difference. Here there's only a 1-cent difference. Over here in just out of the money puts, we have a 1-cent difference between the bid price and the ask price. There's a 2-cent difference between the bid price and the ask price. That means you're not paying a huge premium than when you trade these options. You're not paying market makers a huge markup to buy this and then have it be worth the bid price immediately thereafter. Let's compare these prices to another popular index, the Dow Jones Industrial Average, Diamonds. First of all, we notice there are no weeklies available. There are quarterlies, but no weeklies. There are dollar increments, but look at the big difference. Look at the difference between the bid and the ask price. 6 cents, 5 cents, 7 cents, 6 cents. That means that when you buy this option for $1.50, it's instantly worth $1.44. You're getting lousy execution prices. Let's check another one. Let's check QQQ, very popular index. Again, we have a 2-cent or there's a 1 cent, okay, but there's 2 cents there, there's 2 cents there. Most of the time, there's a difference between 2 cents in the bid and the ask price. But the stock is selling for less than half of what SPY is. So 2 cents here actually means 4 cents for SPY. In other words, there's still a big advantage to SPY, even with the Qs. Okay, in summary, here are the advantages of the SPY options. The less underlying volatility to the underlying itself, which you love if you're trading calendar spreads. Strike prices are at dollar increments. There are weekly, monthly, quarterly, and leaps available. There's extremely small bid-ask spreads, which means you get good execution prices. And finally, there's a high open interest, i.e. deep markets. All these reasons are why SPY is my favorite underlying stock.